Warning: the views and opinions expressed in this program are our own and/or those of our guests. They do not necessarily reflect the views or positions of our employers. Viewers' discretion is advised.
It's a little different than 2006, I think. In 2006, I think it was a mess.
But especially in this market, because changes are coming hot and heavy, hot and fast, right? So you gotta be educated on it.
Those are always hurdles we were able to get over previously, but I think the way the market is currently, I think some of those character issues are starting to come up, and they're getting a little hesitant to approve deals like that.
And you can kind of tell when you start submitting deals, right? And you get no feedback, no nothing at all. So you kind of have an idea that, hey, we're about to get sold.
Iowa and Nebraska and all that, and what it is the snow will move across over the Great Lakes. That storm system will pick up all the water and then dump it right on New York as it keeps going. So that's why we get lake effect snow. So we can get 4 feet of snow in a night, a night. It's insane. I'll have to send you guys a video of. So my sidewalks are out front. Have like a little bobcat, like a plow. They have to plow the sidewalks. And last year, I think we had 4.5 feet of snow fall in one night. It was insane. And guess what happens? Nothing. You go to work, you drive, you go to the grocery store. Yep. Like you go driving that stuff.
Dang, dude. Wait, why are you out there anyways then?
Oh, I'm moving next month.
Oh yeah, where are you going?
Nashville.
Oh,
Okay.
Lots of people go to
love
Nashville.
Well, I'm going to go 25 minutes north in a little town called Springfield. So I can't be in the major cities. I've been in a city my whole life. I'm good.
Why Tennessee though? Why out there?
That's where my boyfriend lives.
You got a boyfriend?
Oh, well,
yeah.
That makes sense.
Hey everyone, welcome back to the BDO Show, a podcast for BDOs by BDOs. I'm your co-host, Emily Detor, and I'm here with my fellow co-host, Andrew Chong, Daniel Park, and John Chung. At the beginning of each episode, we're always going to remind you to like, subscribe, and send over your topics and suggestions to the BDO Show at artofsba.com. BDOs. Have you ever had a borrower bring in like a brother-in-law to do their life insurance? Doesn't end well, does it? We've all been there. When you require life insurance on your SBA loan, it's critical that you bring in a company that specializes in getting these policies in place for the SBA loans. The last thing you want is for life insurance to be the holdup. We all know that's a rookie mistake. SBA Protection Quick Close Life Insurance is the fastest, easiest way to secure the insurance protection that your borrower needs for their SBA loan. Their process is simple, hassle-free, and only takes a few minutes of your borrower's time. No lengthy paperwork, no complicated forms. They even have programs that don't require labs or doctor records for approval. And best of all, you will have the collateral assignment back in less than 24 hours. It's a no-brainer. Go to sbaprotection.com for more information or email Adam Bergen at adam@sbaprotection.com. Okay, so today's episode, we are going to be talking about the state of the market. But before we get into it, I want to introduce our guest, Zach Bennett, who is joining us today. Zach, why don't you go ahead and give us a quick intro?
Yeah. Hey, everyone. Zach Bennett. I'm with Cal Private Bank. I work on the SBA side, which is actually called Private Business Capital, which is, I guess, a division of Cal Private Bank. I do a lot of 7A, 504 projection-based deals. We do a lot of refinances, actually, of 7A deals into 504, working capital, and business acquisitions. I've been with Private Business Capital for 6 years now, and I live in San Diego.
Ooh, San Diego. I've been there. I love it. Fun story, totally off subject. I was sitting at a restaurant in the Gas Lamp District, I believe it was called. And I'm from Syracuse. And my friend at the time took a sip of coffee and I was like, Syracuse, China, the entire restaurant. There was this old factory that made plates and forks, knives, and expensive Chinaware. And the entire restaurant bought all of it when the factory went out of business here and shipped it all out to San Diego. So that was kind of cool. Really quickly, Daniel, you know Zach.
Yes,
how do you know Zach?
For a while. How do I know this guy? Well, we've got a lot of mutual friends, but I think it was a few years ago, Zach. You're like, hey man, I see you on LinkedIn. I see you on the podcast. I want to learn, and find out and talk about what you do to make you who you are. So this man really drove up here from San Diego, and I think we had lunch up in Anaheim somewhere, right, Zach?
Mm-hmm. Yeah, we
And
did.
I told him, look, that's what you got to do, man. Just keep at it, and one day you'll get there. And here he is, a few years later. So yeah.
Would you consider yourself a mentor to Zach? Like, did you guys work together and
Not
like
a
aiding
mentor.
and
We talk a lot about fantasy football. I mean, it sucks that
oh,
he's a Cleveland Browns fan, but hey,
ooh.
Yeah,
What are you,
brutal.
Daniel? Okay, what's everyone's team here?
my family's from Buffalo. I'm a Buffalo Bills fan. We just
Yeah,
took a big
Bills,
loss the other
100%.
day. Yeah, yeah. We kind of embarrassed ourselves a couple days ago in Atlanta, but hey, you know,
So we
we
got
So I'm
Browns.
older,
we
so I'm a
embarrassed
Cowboy.
ourselves.
I'm a Cowboys fan, but
Ooh,
that's because I'm
that's
Bro, you're
older
from
because it was on
Iowa,
TV.
dude.
that's our
It was on
producer's
TV all the time.
team.
They were
Chiefs
America's team.
Cowboys.
They were America's team. They're America's team. But I'm from Chicago, so I love the Bears too. So I'll tell you.
Andrew, what do you got, bud?
Bears just won, right?
Yeah.
You're a Bears fan?
Wow, man!
No,
Like,
he's
I'm in
literally like
LA,
Googling it
so
right now.
I'm in LA, so
You're
Rams and
Rams?
Chargers. More Chargers right now, since they're not in San Diego anymore.
Yeah. Anyways, why don't we get into the episode? So we're gonna talk a little bit about the state of the market, what's going on, some trends. We're seeing some shifts in lending here. And then we're gonna try to look ahead a little bit. So Daniel, open our episode. Let's start with the big picture. What are you all seeing out there right now in the market? Like what's going on?
Definitely there's been a shift. More now playing defense, right? They're scaling back. Um, and we are definitely seeing the credit quality deteriorate, I guess, if you will, right? The type of deals that we're seeing is not what it was last year. So yeah, for sure, we're definitely scaling back on credit on the credit side. Yeah, and we're definitely seeing more delinquencies in our portfolio. So yeah, we're definitely scaling back, and I think that's across everyone, right? I mean, I don't know if everyone's
Yeah.
shop. I don't know how it is
Yeah.
for you guys, but especially for us, yeah. I am no longer taking the role as a chief marketing. I guess I'm being more of a chief risk officer now.
Sounds fun. Sounds
Yeah,
amazing.
this is no longer the BDO show. This is now the
The man
business
who
defensive.
gambles in the risk department. I love this. This is great. He's gonna be like at a blackjack table, like doing his job at the same time.
Yeah.
What about Zach? What about you here? You're new to the episode. Let's see what you
Yeah.
got for the state of the market.
Yeah, I mean, I think we're seeing a lot of deals come in that may have been approved elsewhere previously. We have a lot of the deals are tighter cash flow, essentially. A lot of projection based stuff. And I think one of the things that I think borrowers are trying to get creative. I don't know if you guys are seeing this too, but a lot of them are just like multi-tenant. So they're able to occupy the 51%, or maybe a little bit more, and they have that tenant income coming in to help kind of help with the larger payment, because obviously the the values are not coming down. There's interest rates are remaining high too, and so I think being able to have that tenant income has helped them on that side. So the way we look at it is we look at it from the operating company side. We also look at it from the global side too. So sometimes that'll help us get a deal across the finish line.
And then I know we kind of touched on this a little bit, but you guys said that shops are starting to tighten their credit boxes. We're seeing some slowdown, and then we're also kind of taking a step back from the national product model. So, John, what do you think is driving all of that?
Well, I mean, I'll concur with these guys. I mean, I think the credit side is tightening up. There's default rate went up. I think when COVID hit, a lot of these, it was kind of flush with cash for a lot of companies and individuals, and went down to their side of things, right? And I think they were kind of being able to spend when they could. They had like quasi free money, right? And now it's kind of been more normalized. Still a huge gap between owner and prospective buyer of real estate. Zach, to your point, yeah, I do see borrowers coming in there and trying to buy maybe a bigger building. Maybe I think they're like cash rich, but maybe cash flow poor a little bit on their business side. So
Yeah.
they're coming in and they're trying to buy a bigger building and try to get the rental income to help pay for the mortgage payment, which makes all sense in the world. So they're kind of working around the 51%. Do they really need to occupy 51%? Some cases, probably
not.
Yeah.
But yeah, so it's more of a question of going to credit and saying, hey, look, they're going from 4,000 square feet to 10,000 square feet. This is the reasons why. Sometimes it's a little bit more. I think a lot of shops, I think, are seeing and becoming a little more guarantor dependent and really looking at the personal side.
Yeah.
More so than just the company itself. They're kind of like, okay, company looks great, balance sheet looks great. Who do the owners look like, and what do they look like, and to the global cash flow perspective, absolutely, right? I think most banks are looking for somebody that has perhaps other sources of income, not via distributions, but more via W-2 income, and pulling all those folks in, and then seeing that folks have assets and they're not highly leveraged on the personal side. Has some liquidity as well. I think that's kind of what we're seeing, and I think it's on the commercial banking side, it's the same way, right? They're tightening up more, even playing more so defense than we are, because most of the BDOs here don't have to bring in deposits, right? So on the commercial banking side, there, everything's at risk. If you lose your line, you lose your deposits, you lose the TM, you lose everything, right? So it's an interesting time right now. We'll see what happens with rates. We'll see what happens with this shutdown. We're entering the third week right now, right? So
Crazy.
last one.
Mm-hmm.
Yeah, the longest one was 35 days in recent history.
Yeah.
It was that in
So
2019, right?
yeah,
Yeah.
I believe so. Yeah.
Did you guys
2019, I
all
believe
just
it is.
Google this, or y'all just knew the top of your head?
No, actually, I wrote a piece up on it in the Wall Street Journal. No, I'm kidding. No, I'm kidding. I mean, it's just when you start doing research on this, and everyone's kind of like, what's going to happen, right? I think some banks are going to have to, if they have the capacity, start doing some, maybe some bridge notes if they're going to fund a 7A loan, and then roll that right into the 7A. I mean, I think we have that opportunity at my institution. I think some of you guys do, right? So we just have to work around it. I mean, this kind of stuff happens, right? And we just have to deal with it.
And then Andrew, so for someone who may be listening in today, a new listener, someone new to the industry, is this kind of cycle normal? Is this something that we see every once in a while, and are we kind of in uncharted territory right now? Like, what do you think?
Historically, right, every 10 to 15 years or whatever the cycle may be at the time. I mean, I've seen this 3 times. Let's not say it, at least twice. So,
So how old are you really, Andrew?
so this is what I've been seeing lately. So, let's say a restaurant, for example, was started up a couple years ago. Now it's the sales have gone up and whatever, and now they want to sell at, I don't know, millions of dollars. And as John mentioned previously, so if the borrower or the global is weaker, do you really want to do that kind of a transaction like a Bizak at millions of dollars? So those are the questions that I'm facing as of right now. And the other ones that I'm seeing are, like if it's not a special use property, but if it's an industry specific property, like some of the liquor store properties, restaurant properties, some of these specific industry type of properties were selling at premium, and people are still thinking that, oh, it's this kind of an industry, so I should be able to get 700, $800 a square foot. And I'm like, watch the news, buddy. It's not that type of a market right now. You're thinking last year, the year before. So, I mean, this is not new to me. I've seen this over and over. Honestly, yeah.
I think you have to be very cognizant of kind of other forces too, right? Companies really depend upon exports with all these tariffs, right? So you've got to kind of be up to date on what's going on. You kind of got to see what's going on, and I think credit's very keen at that. In fact, sometimes maybe they see too far ahead. But I think some of these factors are hitting us, right? So you just got to deal with the hand that's dealt to you, right? And kind of figure out what makes sense, right? What's going to be around. It's going to be somewhat recession proof or tariff proof or whatever it may be, right? Because we're dealing with a lot of different things right now. I mean, I was listening to Bloomberg this morning. They're talking about, it feels a little bit like 2006. I'm like, God, I hope not, because that was horrible, right? It was great, and then it just went down. Which I don't.
Oh yeah.
I think it's completely different than that, because I think that cycle, kind of to your point, Andrew, was probably the longest time before that cycle hit, right? It was like a long wait before that 07, 08 dip. It was just, we're just riding the wave for so long that when it hit down, it was just really, really steep.
I mean, we've got some government shutdown happening now. You mentioned COVID, the ripple effect from that. But do we know exactly why this is happening? I know you said it happens every couple, 10 to 15 years, but
Yeah, we're kind of going with the whole financial cycle. That's one thing, and I think every time something, or the current state of market, this kind of condition It happens because things kind of bunch up.
Okay, BDOs, it's story time. And no, I am not talking about the time Sterling tried to finance a zoo. You'll have to go back to episode 3 for that. I'm talking about the story that your borrower has in their head, and they may need that extra boost to finally get it onto paper. Rapid Business Plans is a known and trusted partner that can help them do just that. Whether your borrowers are working towards acquiring a business, starting one up, or expanding and making moves, within just a few short days, Rapid Business Plans will deliver powerful, fast, SBA and USDA ready business plans with projections and assumptions. If they need an export business plan for an ITL loan or a feasibility study, they have you covered there too. We know this process is not a walk in the park, or should I say zoo. Let the Rapid Business Plans team take some of the wild out of the process so that your borrower's vision and passions can come to life. For more information or to get acquainted, email Bethany McClellan at bethany@rapidbusinessplans.com or click the link in the show notes.
Right now, as John mentioned, the tariffs, I don't know, maybe the COVID kind of prolonged, whatever else was coming, things were broken, but it kind of got over the hump with the free money and all this other stuff, right? I mean, that could be, I'm not an economist, this ain't CNBC, but, I'm just kind of generalizing some of the stuff that, we hear on the news, right? From my point of view, it's a little different than 2006, I think, and I honestly very much hope so, because the conditions are different. In 2006, I think it was a mess. Big, and I tell this to a lot of people, is that when you see housing market going 135% cash out, I'm like, oh my God, this is gonna go bad, right?
Yeah.
You don't have stuff like
There's the rating agencies. It was the rating agencies. It was a lot of this is A paper, which is really more like C or D paper, right? It was the 5-1 arms, right? That basically left people holding the bag. Once their loan shifted, right? It was a lot of kind of just look the other way. So we don't have that. Those safeguards are in place on the housing side, but now we're dealing with like a housing shortage, right? And apartments are expensive, right?
Yeah.
So it's kind of like, and then you've got new foreign buyers coming in the market oftentimes buying all cash, which kind of depresses the market, right? Because it's not for the right necessarily buyer in a certain sense, right? Because it's not like they're raising a family, they're just doing it for investment and to buy it all cash. So it kind of screws up the market a little bit. But I think it's an extremely interesting time. I think you got to be a little more thoughtful in what you do, right? And you just got to be a little more conservative. And I think it always goes back down to the individual, right? Kind of, the business is great. And, obviously we're going to look at the business cash flow. We'll look at global as well. But more so than that, we're going to look at the solvency and how strong the individuals behind the scenes are, right?
Are you guys looking at like the character too? Like a lot of the comments are like character in terms of the borrower. Like, hey, this looks like a good deal, but the guy had a bankruptcy, 2010. Like, what's to say he's not going to do it again? So I think those are always hurdles we were able to get over previously. But I think the way the market is currently, I think that's some of those character issues are starting to come up, and they're getting a little hesitant to approve deals like that. At least from my side. I don't know if it's the same for you guys.
Yeah, you're right. You're right. Because a lot of institutions would be like 5 years, 7 years, 10 years. Now they're like, you had one period, forget it. You know what I mean?
Yeah.
Right.
Yeah.
So, Zach, I was actually going to ask you, what are some of the warning signs that a BDO should look for when they think that their shop might start to change directions?
I mean, I think the first red flag is when you submit a deal and you're like, hey, this is a great deal. And then the credit manager comes back and goes, I don't like it. And you're like, what?
Yeah.
What are you talking about?
Credit's just karate chopping all your deals.
Yeah, you're like, this is a deal we do all day long. What's going on here? And then you start getting the messages trickling down from upper management, like, hey, this is the reasons behind it. There's some delinquencies here and there. There's a foreclosure that we recently just did in that specific space, like in, let's say, a gas station or whatever it is. So I think that's the first big red flag is when you submit a deal and it gets kicked back pretty quickly that you normally would be approved, no problem.
Yeah. I think you could also see it even from the non-BDO side, kind of with the rest of your, like the operation side. Like, let's say somebody leaves and they try to just not replace that person, but try to have somebody else cover that position. BDOs in general, right? If your team's not growing or you're not interested in growing, you're just kind of maintaining. And if anything, kind of looking closer at some of the lower producers, then you kind of know things are changing, right? Because make net income by doing more deals or by cutting operating expenses, right? So you can kind of see what's happening on that side pretty quickly.
And, kind of like when your bank or your lender starts to tighten their credit box, like how do you guys react? Like, do you ask questions or you just go with the flow with you kind of keeping up with how they're keeping up?
I think the
Eh,
best thing to do is have your own argument for the deal, like Zach was just mentioning. I mean, on the surface, it might look like a great deal, but maybe the experience a little bit weak. So the deals that we're working on right now that are getting approved and getting funded are, let's say, if it's a restaurant and the numbers don't look that hot, but the guy has 20 years of experience or 10 years of experience and, had success, previously with the previous business they operated or they're currently operating affiliates that's pretty successful. I mean, that's our cup of tea right now, in terms of some of the business acquisition deals that we're doing.
Yeah. I wanted to kind of move over to like mergers and acquisitions and market consolidation a little bit here too. I know that we've been saying we're seeing a lot of M&A, shops merging, acquiring or being acquired. What do those mergers mean for those SBA teams?
It's funny you mentioned that because just within our bank, right, a few months ago, we had an entire SBA team kind of move over from another bank, another competitor, which I'm sure you guys are already aware of, right? That tells me that as a bank, we're, we're still wanting to do deals and, make income, right? That's the way I look at it, right? So it'll be more of a warning sign for me if we started laying off people. But, you know, uh, we're not. We're actually trying to grow. So I'm not sure where this is headed. But for us, I feel like, we're still in a growth mode, which is kind of, almost it's almost weird, I guess, in this economy. So I mean, I don't know. Yeah, it's almost like we're going the other way, but from an M&A standpoint, yeah, it's good that we're not laying anybody off. Yeah, we're actually hiring. Yeah, so
We're doing the same.
yeah,
Oh, I'm
seems that
sorry,
kind of
Emily.
weird. Yeah,
Yeah.
just I don't understand the math behind that, but yeah, we're still hiring, which is kind of unusual. I don't know
I
if you
think if you're in a
guys.
good capital position, if your institution is a good capital position, I think it is
Mhm.
good to be hiring at this time because you can get some good talent that normally would
Yeah, that is
change
true
jobs.
because there are a lot of layoffs, right? So yeah, you were able
Yeah.
to capture some of those talent that's kind of available, I guess, if you will. So maybe that's what it is. But yeah, we're actually growing. We're actually hiring. Yeah.
Had like Andrew or Zach or John, have you guys ever been part of a merger or
Oh yeah.
Actually,
Many
I was
times.
too. Yeah.
well, you said you
Many
were.
times.
Well, my previous bank got bought out, right? And we knew the writing
Oh,
was on the wall already. So I was just waiting for to be fully invested and just get out of there, which I did. That's how I came over here. But yeah, I mean, we already knew. We had this meeting before I started here. The CEO of the current, I think, previous bank said, "Hey, we're not selling." And sure enough, a few months later, made a big announcement. So we already knew it was coming. And you can kind of tell when you start submitting deals, right? And you get no feedback, no nothing at all. So you kind of have an idea that hey, we're about to get sold. So I left just before we got sold. So it was a good move on my part. Yeah.
Yeah. I think
dang.
you see the signs though. I mean, sometimes institutional buy just for the assets and
Yeah.
existing assets, and they not want to grow, right? They just want to grow that way, kind of somewhat organically. Just they want to buy you for the assets, but they have their own people, they have their own teams, they have their own underwriters, and that's when you get a little bit worried, right? Because then you're like, okay, Big Brother bought us. Now what are they gonna do with us? They didn't seem like they really care for us, right? So then, kind of like the tell signs like hiring or like growing aren't there. A lot of an operation side is going to have the same position, right? And they've done it at their institution for quite some time. So why do they need some more of those folks? You know what I mean?
It's never good for the bankers when there's a merger, because it's always one thing or another, right? Either they all get up and leave, which we've seen a lot, right? Or they are kind of fighting for their own position, status, whatever it is, title. So I mean, I don't think it's ever really good for the employees, when the banks merge. I went through a couple of myself. The longest I've seen two departments coexist through a merger was like a year, and that was like, I don't even know how they did that. They were competing with each other and stuff like that. And I mean, it's just with Daniel's Bank, it's a little bit different because you kind of add it on. It's not through a merger, so you guys are in much better position than the example that I'm mentioning. But yeah, you got to kind of see what's going on, and I guess make your own decisions when you're in one.
Let's go ahead and start to look ahead a little. Do you think this is a temporary tightening cycle, or do you think this represents more of a permanent shift in the SBA market?
Well, I mean, there's been a lot of changes with this administration coming on board, right? I mean,
Oh,
so
yeah.
you got to, you got to kind of just think about that, right? I mean, certain things are, they want to build more manufacturing here in the United States, right? But at the same time, they don't want to export as much. The tariffs are in place, right? Citizenship is important now, obviously, more
Mm-hmm.
so. So I think, the fees got reinstituted back, then and they probably should have it to a certain extent, right? Because
Yeah.
they're all waived because of COVID happened and everything like that. But I mean, it was very sudden, right, on a lot of these changes. So I think it will eventually revert back, not all the way. I think there'll still be some changes to it, right? Because everyone puts their signature on anything that they, kind of run. I think some things will remain, but I think it's a temporary bit. I'm hoping, right, and it'll change, but who knows? I mean, it's such a dichotomy of some good things and some kind of scary things, right? Like, let's increase SBA limits to 10 million bucks. I'm like, woohoo! And then they're like, okay, we're gonna dig in a little bit more about your citizenship and your green card status. I'm like, oh, that's
Yeah.
gonna be challenging, right? So it's I think you just gotta we'll see what all this, the fire's over and the smoke is gone and what it looks like. We'll deal with it.
Well, I mean, I'm not the most experienced guy here in this world and been through these ups and downs, but yeah, I believe it's temporary because I think it is somewhat self-inflicted, kind of like what John's saying is because we are trying to move the manufacturing back here and we're kind of putting the fees back and things like that. But I think with recent regulations kind of being reduced and like kind of the tax incentives, and then also with artificial intelligence coming in, I think that's a big thing with manufacturing. Like, who knows what's going to happen with jobs, you know what I mean? But the companies could move back here and it could be mostly AI driven, a lot of it, which is a little scary. So I think it is temporary. I think maybe in 2026, 2027, you'll start seeing, more of a boom, I think, from the economy. I think it's just kind of a temporary self-inflicted right now.
So before we end the episode, we always kind of do like the one piece of advice for BDOs, which I love. It's like my favorite part. So if you guys could give BDOs one piece of advice trying to navigate some of the uncertainty in today's market, what would it be?
As I kind of mentioned earlier, I think it's really important to look at the borrower in depth, experience, maybe have an interview, whether through the phone or in person, and try to really have an argument for your deal. Because if at the same cash flow, if the bank used to do the deal before and now they're not, then what do you got? I think experience, character, John mentioned, stuff like that is really important right now, where you could say, hey, the economy might take a dip, but this guy's not going to go under.
Okay, I'd say don't get too high or too low in this market, right? You get a win, don't think it's the greatest thing in the world. You have a loss, don't think it's the end of the world. I mean, things had to kind of work their way out, and you just got to be able to adapt and pivot pretty quickly in this market. I mean, in any market, really, when it comes down to it, but especially in this market because changes are coming hot and heavy, hot and fast, right? So you gotta be educated on it, and you gotta really partner with underwriting as well as closing to make sure things happen in time and fashion.
Yeah. DP, what do you got for us?
I'm gonna kind of piggyback off what John said. I think you just have to be able to adapt. Yeah, and that's going to be the key. And also, from a credit perspective, forget the bank. Put yourself in the bank's shoes where you're the actual lender, right? And what you want to ask yourself was, would you lend money to this guy or this borrower here? And why not? That's really how you would approach this whole credit thing, right? Is really, let's pretend that you're the actual lender and it's your money at stake, right? So what would you look for? Why wouldn't you, lend money to this person or this individual, this borrower? That's kind of the approach that I would take. Yeah.
I like how you just said, I don't have a lot to say, but then you proceeded to say a lot. That was really great.
Hey, you know what? You know that example. I mean, every credit person I've run into has always given me that example. I'm like, I wouldn't lend money to anybody.
Yeah.
So I don't even know what you're
Shut
talking
the whole
about.
thing
So
down.
of course I'm not.
That's
It's not
funny.
my money. It's your
Yeah.
money. I'm not doing that.
Yeah.
Zach, let's close the episode out with your advice to BDOs.
I think for me in this world of just, it's been so crazy, is just be authentic. As I'm going to go a different way with this. Just kind of be authentic as a BDO. Just really try to find your niche within your credit box. Because I think there's so many products and things out there you're doing. I think just if you could, I think long-term success is really just about believing in what you sell. So I think even if it's just one thing that you do really well, just do well at that. Get known for that, close deals like that. And I think that'll be, I think in terms of uncertainty of the market, I think that's somewhere you could maybe find some success is doing that.
Yeah, I definitely think just from being on the show and being around so many different people and guests and BDOs and everybody, I think passion is the one of the biggest piece of advice that you can get from something like this. Watching a shift is be passionate for your lender and be passionate for your borrower. Kind of like take yourself out of it. Like if you do right by the borrower, you do right by the lender, and you're passionate about both of those things, nobody will fail. So I think passion is always going to be the biggest contender in my book. But guys, thank you for the episode. It was awesome. Zach, thank you for being a guest. We hope to see you again soon. Andrew, Daniel, and John, again, thanks so much for giving everybody, kind of an overview of where the market is at right now. If anybody has any questions for any of our BDOs or anybody on the show, just throw us an email to the BDO Show at artofsba.com, and we will see you next time.